What's up, guys? Welcome back to another TechnoloTrade video. This video is going to be all about call spreads. I've been getting a lot of questions why I use them and just, basically can I go over them. I sell a lot of call spreads. I love call spreads. And the reason is it's basically a naked call with protection. Now, if I came here, this is Apple. If I came here and sold a 122 call with 19 days to go, this is the Febs, I would need to put up $1,860 in buying power with a max profit of only 119. So the reason I use call spreads is to cap my loss. So for me, it's a lot easier to let a trade run when you know how much you can lose. Because once it gets close to that max loss, all you gotta do is hold it and pray for a miracle. If not, okay, you got a max loss, whatever. So here is a call spread. What you do is I sell that same call, but I buy a call further out. Now this is a $1 wide call spread. The 122, I sold the 122 and bought the 123. Here, I'm collecting 23 cents. So now, yes, I can only make $23 on this trade, but look at my buying power. I'm only responsible for that money in between this dollar spread I just put on. So in between 122 and 123. Seeing as I sold it for 23 cents, which is $23 because each contract is 100 shares of stock. So $1 spread would be 100 because 100 shares. So $100 minus $23, $77 is the max I could lose. Now, it's a lot easier to sit here and, see that $77 max loss and only a $77 drawdown in your account than $1,800. Now, to get to that same 119 bucks I could have made, I just got to sell a couple more of these. So, let's sell 5 of these. Bam. So, instead of 119 bucks with $1,800 in buying power reduction, I'm collecting $115 with $385. So essentially, for that same $1,800 I'd be putting up to collect $119, selling just that one naked call, I could sell 15 $1 call spreads. Jeez, even more. $1,800, even more. So there you go, $1,800. But this time, the same drawdown is selling that one naked call. But instead of my max profit being $119, my max profit is $552. Yeah. So, in a nutshell, that's why I sell call spreads. Now, let me show you from a charting side how I would set up a call spread trade. So here we have Apple. As you can see, she is flirting with the all-time highs. Let's draw a vert line in there. So you can see she's flirting with all-time highs at $120. Now, the reason I was playing with the 122 calls is what is this? Linear regression, 50% linear regression channel is topping out at 122. And as you can see, there's been one time in the past year that it's gone above this channel. It usually respects it pretty well. So that's reason one I was selling those 122 calls. Reason two, it's at all-time highs. And, I mean, me looking at this, I see a lot more downward pressure than upward. We're at all-time highs. Before the split, that's, what are we looking at, $840? Something like that, something stupid. For Apple. So yeah, that's why I was playing around with the 122s. Also, screencast is messing me up. Okay. Also, I'd like to play, this is probability out of the money. So the 122s have a 75% chance of being worthless in 19 days. So a 75% chance I make all money either way. Either selling this call naked, selling a call spread. And call spreads, I like call spreads because not only do you benefit from a price move via whatever your delta difference is between the two, but you also have theta decay, so every single day you make money just because that closer to the money option is losing more than that further out of the money option. Therefore you collect the difference because net you sold a call. And also the Vega contraction, which is the volatility. Now I don't have that up here, but you can see IV percentile is in the 52 percentile range. So over the past year, the options are juiced to the point of 52%. If the highest they ever been was 100%. So I like to sell above 50 because 50 knows the mean, and most of the time the volatility moves around it. I mean, you can see here's the vol over the past year, and it's, you know, staying around the same spot pretty much. So that is a call spread. Like I said, the main reason I use it is the capital reduction, because like I said, it's a lot easier for me to sit on a losing trade where I know how much I can max lose. It's so much easier because then in a day, you know, you can hold it up to the last day, and maybe in that last day the market falls apart and you make all that money. If not, you had your max loss. Now, if it was a naked call, that's a different story. Because a naked call, you're gonna get assigned if it goes in the money. So I hope this helps some of you out there. Just a short video on call spreads, how I use them, why I use them. If you have any more questions, just put them in the comments. Like and subscribe if you liked it, and I'll see you guys later. Happy trading.